Welcome back to our afternoon session of 2020 Infra Day by Natixis. I'm very happy to be here also this afternoon. I'm Cristina Balanos and I will be your MC this afternoon. Also, we have a great agenda for this afternoon, 3 live panel discussions and also a live keynote to conclude. So let me remind you how the platform works. If you haven't actually discovered it yet, you have the ability to watch all the live panel discussions on replays and also other panel discussions on demand, and a digital library, interviews from experts, a podcast, and plenty of other things. I really invite you to check it out. And if you would like to network, you can also do it through the platform. Everything happens there. Everything happens there. And we will now start for our afternoon session with a live panel discussion from here in Paris. So let me introduce the theme: how does the COVID-19 crisis impact the development strategy in the renewable sector? We will actually explore to which extent this COVID-19 crisis has impacted and is impacting this development. So I will now give the floor to our 3 panelists and moderator. Let me introduce them. Romain Desrousseaux, Deputy CEO of Neon in charge of international activities. Frédéric Belois, Executive Vice President for International Operation at EDF Renouvelable. Amir Sharifi, Managing Director at Ardian and in charge who is in charge actually of coordinating Ardian's renewable energy investments mandates globally. And to moderate this panel, please welcome the head of the EMEA Power Renewables Industry Group at Natixis, Stéphane Dubos. The floor is yours.
Thank you, Christina. Hello to everyone and welcome everyone. I'm very happy to moderate this panel. So basically, generally speaking, when we have the feeling that the COVID-19 consequences on the renewable sector have remained relatively limited. Implementation of lockdowns have, of course, had their effect on construction and commissioning operations. Sudden drop in power demand had immediate consequences on the power prices and as well on the sudden increase of the relative share of renewables generation in the energy mix worldwide, with consequences on grid, by the way. But as opposed to other sectors, we have the feeling that renewables appear relatively immune to demand or drop in demand, in view most notably of contracted exposures and priority dispatch implemented in many geographies. The crisis, in our view, has, however, accelerated awareness of energy players with respect to long-term sector trends and accelerated as well strategy adjustments of many energy players. Momentum is clearly towards energy transition, as highlighted by the stimulus packages. Investors' interest, and that's not new, remains very high, and core renewables generation activities and as well new diversification options offered to energy players are facing a very positive trend. But there remains open questions, most notably consequences of the relative acceleration of the competitive environment in the renewable sector. And I guess we have in mind the oil and gas players, or as well players from the construction industries, and as well potential challenges in terms of reconciling growth ambitions of IPPs and renewables players, while at the same time possibly facing new risks when expanding geographically or when expanding beyond their core activities. So I would have a very first open questions to the first three panelists, which is about what are the consequences your companies have faced in terms of COVID outbreak? Do you perceive that positive momentum, and what are the challenges ahead? Maybe, Romain, do you want to start with the first question?
It's a pleasure. Hello, everyone. I think these are indeed difficult times. Neoen, from our side, is a long-term IPP, so we had limited financial impact because our business model is to sell contracted energy and not services. Nevertheless, as you said, there's a number of delay in commissioning projects, for example. With the turnkey contracting, it has limited impact, but it still has impact. Medium term, I think it's going to be a bit harder. Permitting takes longer, development is delayed, tender are delayed, construction is more complex, so a lot of small issues. We feel the positive momentum. Investing in renewable is one option put forward by the government, but there remain a lot of uncertainty, protectionism, and the inability for the government to really change things, in particular when you look at permitting issue. We see the impact of the low price of electricity, and there's also issues on the cost of debt. Margin tend to increase on the bank side when the banks remain committed. So there are a number of challenges, but we feel ready. We have a lean structure, and we're confident on our ability to secure projects in a time when there will be more opportunities.
Thank you,
The
Romain.
issue is going to be on the execution.
Thanks, Romain. And yourself, Frédéric, you're as well in charge of international activities at EDF Renouvelable.
Thank you, Stéphane. Yes, I mean, I think, first of all, I think as each industry, our top one challenge remains health and safety. First of all, I mean, we are still in the middle of a crisis. So, I mean, ensuring safety and health for our employees and subcontractors, and in general for our stakeholders, is, I think, priority number one. But if we step back on this utmost priority, as you said, Stéphane, I think we can say we have a fairly good resilience on the full value chain of our activities. A lot of efforts have been deployed to adapt to the situation. if I segment by value chain element on the development side, I would say that we had a very good momentum before the crisis, so we are living on our momentum. I just want to point that for new ventures, new business, I mean, there has been a small pause, or it's harder to grab this new business. So, I mean, it is maybe a point of attention if the crisis is lasting for much longer. With regards to project deliveries, constructions, Romain said it, I think we are all having a sudden deep dive into our contracts with regards to force majeure. We receive a lot of letters, we send a lot of letters. I think overall, I think we can say that we have a general relief from the end of the chain from our clients. The off-takers are basically accommodating the situation generally everywhere. I mean, like in the US, the production tax credit has been extended towards the end of the year deadline, but not everywhere. I can stress China, for instance. The deadlines of commissioning by year end of 2020 have not been postponed. So there is a big challenge in meeting these deadlines. And I think we can say that the supply chains have been disrupted, but they more or less work. I can give one example, for instance, of a disruption in the supply chain. That is something we will not expect even for delivering projects in China. China is not able to produce everything by itself. And I would mention, for instance, for large wind farms offshore, certain type of wind farms are using balsa wood in the blades. And balsa is 80% produced in the world in Equator. And the borders of Equator are locked, and it's hard to get the raw material to China. And therefore, this is disrupting somehow the offshore industry in China at the moment. So, I mean, there are knock-on effects we are not yet fully aware of. I think now we have them in mind, but we have to cope with them. And finally, in the value chain, with regards to operation and maintenance, again, I think we have adapted well, and for critical operations, they have been maintained. So I think we are fairly safe on that. And looking forward, I mean, in terms of context, of course, the drop in electricity demand 5% this year has affected negatively the prices. We are affected in the UK, where the legacy system of ROC is exposed to merchant energy. Prices in Chile, the PPPs are self-adapting to the demand, so that's having negative drawbacks. There have been some negative political decisions. I mean, negative for the industry, of course, for the stakeholders, this is not so negative. But in Egypt, the tariffs have been frozen. So this is, again, long-term negative impact on our industry. And to conclude, maybe on a more positive note, of course, the stimulus packages are there to support long-term. And I think the renewable is really at the cornerstone to that. We saw, not necessarily linked to the COVID-19, but China announcing September carbon neutrality by 2060. So this is a huge step forward. And we will see, I don't know if COVID-19 will have an impact on the US election. Probably it will have. I'm not into politics, but let's say it will have an impact. We will see what will be the outcome of this election. But looking at the Biden plan for basically putting in a marble neutral carbon electricity by 2035. So
okay.
Connected or not to COVID-19, that will have an impact probably. So I mean, I would say positive note.
Thanks for the positive momentum as well shared by many of us. And Amir, maybe a more tailored question with you as a fund. I guess, is this a context where you would see or you would feel there is more appetite for business diversification or a stronger focus on investing in core, I would say, renewables activities and avoiding too many diversification at the moment at Ardian?
Hello, everyone. I think diversification is always something you should be looking at when you're a fund manager. If you mean by that going outside of the core sectors in order to enhance your returns, I think maybe it's the contrary that is happening. I think the crisis has demonstrated that the businesses which are reliant on GDP a lot and that don't have essential fundamentals underlying them are more exposed to similar prices than assets which are really relying on the fundamentals. Probably in this respect, we have seen our portfolio many different trends. I mean, we have seen. Of course, the airport industry to be quite affected. We have seen telecom sector to be booming in many respects, and we have actually closed one deal on the back of that just recently in Italy, a large transaction with Telecom Italia. There in the midstream sector, there is in storage of energy. There's been a contango. So each sector has its different particularities, but the common point is probably that the fundamentals of demand need to be there for investment.
Thank you.
In this respect, maybe renewables are a good illustration because they rely on, first of all, a fundamental requirement from many investors and industrials to have a more greener energy mix, and also the profile of the renewable assets, which are probably less linked to GDP, but to other dimensions, are perceived as a safer haven.
Thank you, Amir. Maybe a next step, I guess we've all seen lately some kind of acceleration of the competition environment in an already highly competitive environment, the renewable sector, with new entrants from the oil and gas sector and lately as well, in view of last week's announcement, civil engineering companies. Romain, maybe a first question for you. How do you see that increasingly competitive environment affect your strategy in terms of M&A or organic growth?
We have felt an indirect effect mainly. The M&A opportunity creates, I believe, irrational move, and some of the small players are going very aggressive on tenders to bump their portfolio before selling their company. So overall, I think we're fairly happy to see large players entering in the game because they're rational, and the question is more on sustainability of some of the project rather than of the entrance of a large player and a consolidation, which is good on the market, which is very fragmented.
Thank you. And how maybe a question for you, Amir, and how have you perceived the increased pressure on returns in view of that increased competitive environment? And if you have a view on how returns may converge in the situations where we are seeing players coming from very different initial environments. And I guess oil and gas is not utility-like and is not renewables IPP.
Yes, I mean, pressure on returns doesn't really mean much actually, because it really depends which business plan you put behind it. So, and actually, if you compare the price that are being paid by the oil majors for some transactions, you could think, or the corporates, you could think that those prices are prices that couldn't have been paid by the financial players. At the same time, you don't expect them to have a lower cost of capital than a low yield investor. So probably the difference there is that when you're a corporate or a major, you have synergies or ability to pay a strategic premium for several assets that enable you to differentiate, because then you can integrate them with a larger system. You can use economies of scale. Maybe you have an angle for the merchant offtake. You have a digital approach to it. Actually, that's a bit ourselves how we see also our investments. We try to still remain quite demanding on the returns, but try to get the value from different sources of value creation, which are not just considering the long-term merchant tail as being the key driver. And that makes it quite challenging in the current environment, because effectively the competition has massively increased in the current environment, because as we just discussed before, there's not that many sectors which are perceived as being attractive in the COVID crisis, in the COVID context. And so there's a lot of money that is redirected towards renewables.
Thank you, Amir. And I guess one could reasonably wonder if the huge capacity growth which are expected in the sector could somewhat not offset that increased competition and its effect on the returns. Maybe the next question, there is a big, I guess it's displayed in many new strategies of major stakeholders. We're talking of new electrification in the 21st century, brought by the energy transition, and to which extent this would massively extend power needs in the future with mobility, with industrial applications, green hydrogen. Maybe, Romain, in terms of renewables IPP, how do you perceive the prospects in terms of that energy brought by that energy transition? And have you started to play a role in decarbonizing activities of players coming from the energy and natural resources world?
We do see movement in these new end use, even if I believe most of them are medium to long term. I'm a bit careful about the projects which present themselves requiring a 5 gigawatt electricity supply next year. So overall, I believe there's an opportunity. I believe these players will require cheap renewable from a long-term player. It is economically beneficial. It helps the project accessibility. It's a good step. So we believe we are a natural partner for this new business, and we are already discussing with them. The key question for me is the ability to scale up and to offer them firm renewable on a scalable way as the project develops, because the first step are usually quite small. So in conclusion, it will bring new investment opportunity, but I think the first step to help this project and to help them mature is a supply of firm renewable energy in a scalable way.
Thank you, Romain. And maybe a question for you, Frédéric, in terms of these opportunities brought by energy transition. Would you think it's, in this context, more relevant to specialize in one link of the energy value chain, or to really diversify it in all aspects, notably in terms of, for instance, decentralized generation, EV charging infrastructure? Is this something where players active in renewables have a role to play? Frédéric?
Thank you, Stéphane. Yes, I mean, coming back on the competition, yeah, you hear me okay?
Yes.
Stéphane?
Yeah.
Yes?
I hear you okay. Yeah.
That's okay in the transmission. Coming back to competition, yeah, it's okay. Competition, as you said, is growing. So, I mean, first of all, I mean, what we have to acknowledge is that we are lucky enough that our market is growing enough to sustain, you know, within our own historical business, some growth and some business perspective, 10% a year. So there is room for within our business. We don't necessarily need to escape from our initial business. It's also true that in some places we start to see overcrowding of competitors. I have one example which is a bit, I would say, illustrative to me. It's a tender that was launched this year in 2020 in Togo for scaling solar. We are talking about 40 megawatt peak, so 10 million euro investment. And the competition was, I think there were 23 bidders who qualified for this tender. So I mean, that is maybe an example of overcrowding. So coming to your question directly, yes, I mean, there are pros and cons in specializing, but I think we have to acknowledge that we are somehow moving from a market or an industry that was, I would say, essentially subsidy-driven towards an industry that is client-driven or client expectations-driven. So, and we cannot disregard the expectations of the client for integrated offers, wider offers. And so maybe my perspective would be a bit different as part of a wider utility as EDF. So of course, we are trying to tackle this segment of the market with a wider part of the group. But I think without even taking into account a wider group perspective, definitely we have to integrate more this kind of offers and new initiatives. And we have done such in the UK with a company we acquired recently, Pivot Power, where we are tackling some storage intensive usage and also some private networks for electric vehicles charging. And we have also some initiatives in Germany behind the meter storage for electro-intensive clients.
Thank you, Frédéric, and message well taken. I guess clients driving any strategic with respect to diversification. Maybe I'd like to discuss with you three basically what we feel has been lately and probably emphasized after the COVID outbreak is a kind of resurgence of certain risks in the sector. I guess merchant risks were not new in a grid parity context, but we have observed as well lately resurgence of certain regulatory risks, which we thought belonged to the history of renewables. And of course, Mexico comes to mind, where basically renewables intermittency has more or less been used as a pretext basically for some retroactive action towards renewables. But I guess even in France, I mean, the last 2 weeks discussion surrounding rather old French PV tariff from 2006 is also another sign where we feel there is some kind of resurgence of those risks. And it's a context where particularly Romain and Frédéric, I would like to know if it is affecting your strategy in terms of international growth, and if you would still expect a rather trend of further market liberalizations, and which markets would be most promising to you to move forward. Maybe Frédéric, if you want to start.
Stéphane, sorry, I was on mute. Yes, I mean, we do see, I mean, there are two ways to keep our, I would say, stake or even growing our market share in our industry. Either we can innovate, differentiate our offerings, as we discussed earlier. This is not always possible. We are, of course, aiming for that. Or we can also adapt our risk and trying to mitigate risk as much as possible. And of course, emerging markets are really, for us, emerging as probably the way to grow. We are trying to mitigate the risk as much as we can, but we do see a lot of potential in geographies such as Brazil, Asia, also in India. We are progressing there very much. Not as big of a market as China is, but Chinese market is a very specific context. We are a very small player there, but just picking India as an example, what we see in India is that we are signing PPAs at the moment, so power purchase agreement, long-term power purchase agreement, over 20, 25 years at very competitive prices upfront, around 30 euros, but in local currency and without any CPI indexation. So typically, these kind of offers that are on the market today are allowing players to meet their returns, and some players have disclosed the returns attached to this kind of investment. They are satisfactory returns. And I would say the risks are increasing, but the rationale for this contract to hold for 25 years is very strong, because they will stay very much in the money, in particular because of the non-CPI indexation. So if it's already fairly in the money today, in 20 years, it will be deeply in the money. So whatever is written in the contract, there will be no interest to break such contract for the off-taker. So I think this is a way to look beyond what could be seen as risky, as looking at the fundamentals, which are, I would say, extremely good, and therefore mitigating the risk one could see, I would say.
Thank you, Frédéric. And yourself, Romain, as well, in terms of your perception and how it's affecting Neoen's international strategy.
I think what's happening in Mexico, in particular the fourth T, the President AMLO, shows that the regulatory risk is real. And I think it's more linked to the fact that when times are difficult, everyone suffers, even if Mexico went the extra miles in attacking renewable. I think, nevertheless, it's more a protectionism than a real issue with renewable intermittency. We've seen curtailment, review of rules, but the key driver is to protect the CFE, the local incumbent, and not looking at the project benefit. So I believe the liberalization will probably go a bit slower, and I think our argument as renewable energy producer is to produce very cheap energy, much below parity on the long term. Somehow, at some point, everybody needs cheap energy. And the other positive point is hopefully that countries like Mexico will realize that to restart investment and to attract investment, renewable energy is a good solution. So with that in mind, and with the fact that France is not necessarily the best in class.
Romain, it was briefly interrupted. I fear we lost the connections with Romain.
When they were designed.
Romain, we lost you for 10 seconds, but I guess we had the message passed. Thank you, Romain. Maybe another way to address these risks, and I guess that's an immediate consequence of COVID. We've seen situations where we were suddenly fast-forwarded in the future with a higher share of renewables in the energy mix, acute intermittency effects and grid effects, explaining somewhat the Mexican situation. Is this, in your respective companies, readdressing the way you perceive the business case for storage and for flexible generation? And do you have more emphasis on this in the coming years? I guess we have briefly lost Romain, so maybe I'm going to address the question to you, Frédéric.
Yeah, I mean, storage, I mean, there is clearly huge ambitions. I think we are yet to explore the business cases for storage. I mean, this is a very new industry. The technologies are not that new to some extent, but the scale we are now developing is I would say, newer to us. So we are, I would say, exploring these new business cases. I think there is still some volatility. I think we had some initiatives in the UK. We developed a 50 megawatt battery in the context of the 2019 auctions that took place in the UK. But thereafter, the capacity market has been cancelled in the UK. So because of EU challenges, now it's back on track. But there has been some regulation changes. So I would say it's supposed to help addressing volatility, but it's also a very volatile environment. To date, we have not yet managed to deliver, I would say, pure batteries or storage projects being project finance or, so that to me, it's not yet the pure mainstream, I would say, business as we have on the rest of our activities. But I think it's extremely promising. And I think the first step will be definitely to couple storage with, I would say, the mainstream renewable businesses, i.e. wind or solar, and maybe thereafter shift towards more, I would say, pure storage businesses being, I would say, banked and therefore more sustainable. But at this stage, I would say very much interest, a lot of excitement around storage, but yet to see this industry maturing for utility scale, of course.
Thank you, Frédéric. And Romain, it seems that you are back. Can you hear us? Yes?
Yes, I can. I'm sorry.
So maybe the same question for you in view of Neoen's history with the storage and activity with storage, even prior to the COVID outbreak. To which extent has this further emphasized your interest for storage, this crisis?
I mean, it did strengthen the long-term opportunity of storage. I think there's a short-term issue that we see today with the lower demand, which creates issue on the renewable space. Nevertheless, it's not strong enough to allow for an investment. The key driver to invest in storage is either a regulatory constraint. The government wants you to do it. Here, we haven't seen a regulatory body taking time to solve the issue. The second one is a price signal, and even if price of frequency service are not that correlated with electricity price, it's more correlated to volatility, and there's the low volatility today. So what we've seen during this COVID time is highlighting the need for storage. Nevertheless, it's not strong enough and long-term enough to create a business signal for an investment. What we hope is that this short fast-forward time into the future will show the country that it's important to prepare for more storage on the grid in terms of regulatory or price signal. And we ourselves strongly believe in it, and we'll try to do our best to invest more in storage.
No, and your last point is a good transitioning point for the next question, basically. And we evoked during our introduction the fact that the COVID outbreak had highlighted the stronger resilience of renewables, mostly because of contracted exposures. But at the same time, recently, grid parity environment has increased merchant exposures for many new projects in the sector. We see on the regulatory authorities side that there are ongoing debates, particularly in Germany lately during the summer, in terms of the most optimal offtake regime or auction design that could apply to the renewables, even in a grid parity environment. And I'd be curious to know, maybe Romain, you evoked that point, what would be your view on the most favorable offtake regime and auction design in that grid parity environment and in a post-COVID context?
The bad news is what's good from a government point of view is not necessarily good from an IPP point of view. So I think from a price signal point of view, we've seen very low price in reverse auction with no barrier to bid. So basically, do your best and we'll see what's happened. The question is how many of these low price projects will actually be built in time. And I think the key issue for the government is not necessarily the design of the regime, but to ensure that the project will effectively be built. When you look at what happens in Portugal, we end up to a very low price. We'll see how many of these will get built. I think the positive message from what happened in Portugal is that the government had an issue with the grid. It was very hard to find a place to connect. And they basically tackled this issue by saying, I'm going to auction capacity to connect to the grid. And they did it very efficiently. They will be paid for that. And I think it's a good way for the government to address their own bottleneck on a transparent way. So in conclusion, we don't really have a strong view on what's the most favorable. What we really hope is the governments will be careful in the design to ensure deliverability and bankability of the project, to make sure that we're actually bidding for a project and not bidding for a speculation, hoping to sell the project a bit later.
Thanks, Romain. And maybe again, in terms of these increased merchant risk exposures, Amir, would you tend to think on your side that it is an irrevocable trend? And to which extent do you think those risks, so those new merchant risks in a grid parity environment, have been fully captured in investors' target returns? Amir?
You're right. Yes, can you hear me?
Yeah, perfect.
Yeah. No, you're right. So you're perfectly right that merchant risk is increasingly developed, but what has become, I would say, irrevocable is probably grid parity, or at least producing energy at the lowest cost possible than the merchant risk per se, because effectively the producers of that energy will need to find some offtake solutions for the energy. What has been the case historically has been for the earlier entrants to rely on subsidies and regulated schemes to get comfortable with it. And now more and more investors and players are understanding that this is no longer available in many situations, in particular where the energy market is quite sophisticated. The trend has started with the US in particular, like in the ERCOT system, or in the Nordics, or with the Nord Pool. So in those regions, we have an experience of successful reduction of the LCOE linked to the fact that there was no subsidy, and the requirement to be competitive on the transaction's own merit, and thus pushing the developers to look for the best locations and to improve their technology and the ratio of the capacity and load factors to the price in order to be competitive. So has this risk been fully reflected in the risk-reward approach of the investors? I would say probably not in most cases. I would say that there is a lot of complexity and risk associated with the merchant environment, and that today a lot of investors don't necessarily calculate the NPV of the equity being at risk when they have a 10-year, for instance, regulated stream of cash flows. You generally can still count on another 20 years of merchant tail behind that, and that doesn't really make your equity safe from the merchant risk. Your equity is already merchant day one, especially if you have put debt on the side, which is required to be competitive. So in this context, we have to be fully conscious of where we put our feet in, and be able to appropriately price the risk.
Thank you, Amir. Maybe a question for you, always in this context, Frédéric. Of course, corporate PPA, I guess, do you see demand for corporate PPA being modified in a COVID context where energy transition is accelerating? Stronger demand for green power, Frédéric?
Yeah, I mean, as we said earlier, more and more client-driven market, definitely. I see two segments more or less for corporate, what we call corporate PPAs, or for addressing, I would say, B2B B2B segment in terms of renewable energy. There are the usual corporate PPAs. I think we are talking about roughly 20 gigawatt market in 2019. Is today very much US centric, growing elsewhere in UK, Brazil, Chile, but more and more, I mean, essentially in US, driven also by the tech company. So this is, I think, what the mainstream usual corporate PPA market. And also, I think it's important to flag the other segment I see growing, and that is more and more, I would say this is more distributed PV storage, addressing the C&I, so commercial and industrial segment in particular. This market was around 30 gigawatts in 2019, so already 50% bigger than the usual one, and it's not very much advertised. So here we are, it's going faster, and we are talking about on-site generation for the client or behind the meter storage, these kind of things. So so that's important to have these two segments in mind. So coming back to I would say the mainstream PPA market, this is of course growing very much, but it's getting more and more complex, as Romain was saying, easier for the clients, not as easy necessarily for the IPPs, more and more complex, more and more sophisticated. We have to meet by the hour the profile or the load of the client. They are asking always more sophisticated things. You probably have noticed Google announced last month that they are now carbon neutral back from 2007. So they have managed to kind of mirror their profile even in the past. So, I mean, you have to address the future, the present, and now they even ask us to address the past. Clients and so that implies a lot of aggregation skills, storage possibly, or transfer of risk towards the IPPs. So, but that's the market where it is. And so maybe to have a different risk profile, the other segment, so the distributed C&I market, which is large and growing fast, it has smaller barrier to entries. So, I mean, competition is fierce there. It's much more fragmented market, but there are ways to aggregate this market in a portfolio and to basically compensate the risk in between them. And in the end, have a safer maybe portfolio. So, I mean, the two segments are important. One is getting a bit riskier, and the other can maybe be, I would say, structured in a manner that is a better risk profile and therefore more competitive energy, bad portfolio management.
Thank you, Frédéric. And I don't know if Amir is still with us. I was curious to have Amir react on that change in demand with respect to corporate PPAs, but we may have briefly lost Amir. Amir? No.
I don't see Amir on the screen anymore. I probably lost him. Yeah.
So we've lost him for a brief period. So maybe, I guess another question in terms of this COVID environment, to which extent this is adjusting or modifying your finance strategy and growth strategy in terms of a split between organic and M&A. And I guess, is it an environment, we said it earlier, which is a bit riskier, where you are more inclined to go into partnerships, to establish JV with peers, particularly to explore new business, even peers coming from those new energy ecosystems we have evoked earlier in the discussion. Frédéric, how do you see that crisis affecting this strategy?
I mean, also, I mean, I have to speak as part of an integrated group that has its own constraints and resources. So, I mean, it's a public knowledge that the group has been affected in the short term, DF Group I belong to, by the crisis, maybe more than the pure renewable business. So, I mean, I think it has been publicly said that the group is not out for large acquisitions. And as far now moving back to EDF Renewable, I think we will carry on our asset rotation program. And I think we've been quite pleased to see that we were still able to rotate and share exposure on our assets, including in the middle of the crisis. And one example I can quote is Brazil, as we all know, is a country that is maybe one of the most affected in the world by the crisis, by the COVID-19 crisis, and maybe by other crises at the same time, to some extent. But I mean, we were able, and as this was announced back in August, to to close or to sign, and it's yet to close, but I'm very optimistic that it will close, the sale of 50% of a large wind portfolio to a Brazilian company called Omega in Brazil. So that shows the market is still there, even in the very middle of the crisis. And I think this was signed on August, so it was really negotiated really in the middle of the crisis. So this is still happening. And
thank you, Frédéric. We will have actually to conclude if you want to conclude, because time's actually time's
and so
up.
that this is a rotation asset test for us that is showing that, and same thing for the project financing, that even in the middle of the crisis, we are still able to tackle financing either through equity, and that shows that our business is very resilient.
Thank you very much to all of you. Thank you for these interesting insights that you gave us. I invite you, dear audience, to actually ask your questions on the platform on the right-hand side. You have interactive discussion available, and you just click on questions and enter your question. We have a couple of questions, actually. The first question would be, in the current context, is it a requirement for traditional IPPs or investors to incur more risks to win auctions or M&A bids? Are low returns and investor appetite a challenge and an opportunity for your business? That's a long question. The floor is yours, dear panelists. Maybe Amir, who just came back, if you'd like to answer.
Yes, I think it's probably a fair assessment that the risk return is generally being compressed towards either more risk or a lower return expectation to be able to be competitive in the auctions, especially if you look at the type of prices we're getting at. In Portugal, was cited, I think, earlier on by Romain, and I think at the level of €11 per megawatt hour, you certainly need to take a view that you will have even more savings and OPEX efficiencies on your assets, or have a long-term strategy that will enable you to get comfortable with the returns that would and underlie this kind of prices going forward. So I think this is effectively it's effectively some form of a risk for those who are competing in that arena. At the same time, it's probably an opportunity generally, because it means that electricity can be produced at a cheaper price, and that's good for the whole sector. So it is consumers and also to the industry that this energy is probably there to stay.
Frédéric, thank you. Amir, Frédéric, I think you wanted to add something.
No, maybe, yeah. I mean, I can add. I mean, it's true that it's more and more difficult to find opportunities where we have 30 years of take, or so definitely somehow we have to adapt. But there are still, I just can quote one example where there are still some opportunities for very long-term PPAs with very good counterparts, and I can quote one project we recently secured at EDF Renewable in the Middle East called Al Dhafra. So it's a 2 gigawatt peak project, so the largest in the world, and it enjoys a 30-year PPA with a AA rated counterpart. So, but I think this is unfortunately nowadays more the exception than the rule, and we are glad to have secured this one. But there are still some out there, but the trend is really to go for the clients are pushing us towards assuming more risk, unfortunately for us, but I mean, it's going to increase definitely the volume. So on the own, this is a good thing.
Another question, do you expect new players could join the renewable ecosystem from the downstream low carbon gas or from the EPC, BOP contracting or supply equipment space? Maybe Romain could answer this question.
Thank you. We see new players entering every day, and we will continue to see it. I believe it's probably because it's harder to survive when you're stuck to one piece of the value chain, and that the longer term IPP role is probably an exciting one for many players. So we see more players coming, but as the market is becoming more and more competitive, think it will be more tempting, but also harder for players to stay in the long run.
One last question. Are auctions still attractive? Can tariffs further decrease? Are companies putting themselves at risk when bidding at such low price? That's the last question. Who wants to take it? Amir, I see you smiling. You want to take it?
Well, I think it's a bit similar comment than the first question. It's a fair point. There is, I mean, at such low prices, I think it's a problem. It can be a challenge for many developers in that environment, and that requires more creativity. But if we open our minds, maybe that one other opportunity that this opens is, and that has been not discussed that much, is the hydrogen, the green hydrogen world, because we can see that this is a major shift in the energy transition that is happening just in front of us right now, with programs, stimulus programs in the region of 7 to 9 billion euros in France and Germany for hydrogen. And I think the renewables will have a key role to play there for in the electrolysis value chain, and they will probably, by being more competitive, by being produced at a very low cost, that creates an opportunity for that green hydrogen to be more competitive earlier, and then opens up a whole new world of transition that we could not envisage a few years ago.
The line was cut. The conclusion of your sentence was, could you repeat the conclusion?
I was saying that this opens a whole new world of opportunities that we could not foresee a few years ago.
Great. Well, thank you very much to all of you. Thank you for this great panel. Thank you also, Stéphane Dubos. And if you have any further questions, do not hesitate actually to ask Stéphane, contact Stéphane Dubos for any questions. Thank you very much. We'll now move on in a couple of minutes to our next live session, and the theme will be after COVID, what recovery to expect for the world economy. That will be actually in about 12 minutes, so see you there. Stay tuned, get onto the platform to get connected to other people also if you'd like to network. Thank you very much. See you in 12 minutes. Merci, bravo. Thank you.